effective rights. So if you're a taxpayer and you consider that the UK, for example, has not properly introduced the directive and so is taxing you in a way not intended by the directive, then you have a right to rely on the directive to be taxed in that way rather than in accordance with the domestic legislation if the two of them conflict with each other. And then I just give an example of one of the areas where member states are given quite considerable discretion in terms of how they introduce the legislation. And this is what is known as VAT grouping. And I'll talk about this in a little bit more detail as we go further along. But in essence, this is how you deal with groups of companies. And there is favourable treatment because you can treat those group of companies broadly as if they are one company, so you can amalgamate their VAT consequences. VAT rates are not the same across the member states. In essence, the European Commission wants the rates to be between 15 and 20%. It's trying generally to encourage member states not using rates as a way of encouraging businesses to move into their countries, and it would much rather have them harmonised. But at the moment, there is still freedom. So the UK, for example, sets its VAT rates at 20%, having, when it first started, introduced a rate of 8%. And it's certainly clear that most governments seem to take the approach that taxes, certainly consumption taxes, VAT taxes, tend to go up, and that income taxes go down as they're a much easier way of showing public in terms of fiscal responsibility, whereas VAT is seen as a hidden tax because it's not directly there, but it's a very important revenue-raising tool. So, as I said, the directives do not automatically become the law of the member states. It is up to the particular member states, such as the UK, to introduce them in the way that it considers appropriate and in accordance with the directive. The other different way of doing this is by what's known as an EU regulation. An EU regulation does have direct effect, so it's as if it is primary law in the United Kingdom. And there have been very few regulations in the sphere of VAT. As I said, one of the issues which governments are wrestling with is technology and digital services. And I get set out an example where there was a regulation, and this is the Council implementing regulation, where it is quite clear that the European Commission was trying to ensure that a similar VAT consequence of digital services applied across the EU. I mentioned rates in relation to that, and as I said, the European Commission gives member states discretion in terms of the rates. Broadly, they want it to be between 15 to 20%. And they also give member states the freedom to introduce what's known as a reduced rate or a zero rate. And these are concepts which also apply in the UAE. And so the reduced rate is 5%, and the zero rate is 0, which is slightly different to exempt transactions, which I'll talk about in a second. So as I said, the GCC's standard rate across the member states is 5%, but the GCC agreement allows member states to choose to zero rate certain supplies, and also it mandates, so it requires that certain supplies are either exempt or zero rated. So just going back to how VAT is operated in the United Kingdom, the majority of EU VAT law is through primary legislation, the Value Added Tax Act 1994, and there are reams and reams of statutory instruments that supplement the Act. Effectively, what happens is each time we have a Finance Act, we slightly tweak our system. And that's either to close purported loopholes, which the government wants to ensure are taxed, or to deal with areas where there's a lack of clarity. So one of the things which we do see is a continuing expansion of the amount of legislation that you need to review to understand how the VAT system operates. It may be that is an approach which is going to be followed here. There's also what we have as well, is we have a system of both formal and informal guidance provided by the tax authorities. They publish what are known as business briefs, some of which have the force of law and so to be treated accordingly, some of which don't and simply provide guidance to businesses. So VAT in a nutshell. These are the 5 requirements that apply in order for VAT to be charged in the UK or anywhere in Europe within the European Union. First of all, there must be a supply of goods and services. Secondly, the supply must be taxable. He in turn, that element where you add value is taxed at each stage of the process. So effectively, you're adding a 20% uplift into your pricing, which then goes on to supplier, until you reach the ultimate end consumer who makes no VATable supplies